Hi guys, it's Thomas here from COTBASE.com. Welcome to a weekly COT review. Today we're going to be analyzing the 33rd Commitments of Traders Report of 2026, and as we always do, we're going to start off by looking at the largest changes in commercials net positions to identify opportunities in the market. We are analyzing the classic COT report type. It's got the longest history of COT data. We're analyzing net positions, as I said, futures and options data combined. So let's get started. We have sugar, and in sugar, just by looking at it, we are expecting the market to come down. Why am I saying that? Why am I saying there's going to be a decline in sugar based off of the picture I see? Well, first of all, it's a bearish COT change signal, 43% change. So if you take off large speculators over here and just focus your attention on this red line, you can see clearly that this most recent change is bearish. We're moving from a net long territory down below the zero line. Now commercials are net short. They're shorting overall sugar. So, and if you go back over here, till the end of March of this year, we had a very similar situation just around that top, right? You can see that we have this much greater than average change, which we are seeing basically on a Friday. So March 29th over here is the day we get that signal. That coupled with a iCOT scores bearish reading. Don't forget, this is our unique measuring tool that we developed, and it's really mimicking iCOT COT index analysis. So it's a stress level measuring device, let's put it that way, but it is designed for intraday trading. So you may want to check that out later on. And it is an indicator that you can actually use in TradingView and NinjaTrader. Great tool. But here on the website, you get to see this on a daily candlestick chart. And just before that top, we get this iCOT scores reading, which was huge, very, very significant. Now, it didn't mean that we're going to see the market drop, but it did halt to this rally. There was quite the dynamics in it, and it stopped that. Coupled with a COT change signal, that was a perfect combination to go short. Now, that's pretty much exactly what we see right now. It's a very, very strong signal. We have a much greater than average change in traders' positions. Small speculators are highly optimistic about it, which is another great signal for us. And we had a very significant bearish iCOT scores reading, I'd say the largest on this 1 year time frame. So everything is pointing downwards. Now, moving on to a 5 years chart gives us the opportunity to analyze the longer term picture. Now, what I suggest doing whenever you do this is go back and just kind of see where the last major extreme was. And that's back over here in February. That was a bullish COT Extreme signal that, as you can see, if you take this horizontal line, was able to stop the decline. That started back over here in October, which, by the way, was coupled with a bearish COT Extreme signal. So the market came down, and with this signal, it stopped its decline. It formed a base, and you can see it is rising right now. Now, are we at a level where one should consider just, is this a time to expect the market to continue its path lower? Well, you just got to go back in time, and you can see from like August 2021, just where the market, where traders can really be with their net positions. And that could be even greater. So unless this dynamic continues and traders shifting their positions week to week at such large scale, I don't think that we are at a bearish COT Extreme just yet. In the short run, definitely COT change signal, iCOT scores both pointing downwards. We are expecting a bit of a cooling in the market, but as that happens, I would expect traders to move away from this trend. And if that happens, we just simply elongate the time for this bearish stress level to build up as the market is headed higher. Okay, moving on to lumber, another soft market. Here we have a 37% change in commercials net positions. We are expecting the market to rise in the near term because we have these larger than average changes. We have a large positive reading from iCOT scores. And I do like the fact that the market has been coming down in the past 3-4 weeks. So it's a very good setup, I would say. A short-term COT change signal We have a larger iCOT scores reading. Let's have a look at the 5-year chart. Let's see what the COT Extremes tells us. Well, with this current reading, we are actually in a more bullish COT Extreme stress zone. It did happen quite fast. We had the past 2 reports show us traders, both large speculators and commercials, shift towards more of a bullish stress world. And this is suggesting that the market could go higher. Now, jumping over metals complex, where we basically what we do in complex markets whenever you see that is we simply take the sector markets, gold, silver, copper, platinum, palladium, and combine their COT data into one complex COT data. It's a unique way of analyzing the markets. Gold will be the next market, 28% change over here. Once again, we're just focusing on commercials right now, much greater than average change size, top 5, definitely top 10, suggesting weakness coming in the short term. We have a bearish iCOT scores reading. It doesn't mean you're going to see the market react the next day. It can, and there are cases when it does. For instance, over here, this bullish iCOT scores reading, or the one from March over here, you can see it doesn't require too much time to the market for the market to react. In other cases, it can take a little bit of time. So we'll see what happens, but definitely with this larger change in commercials net positions, we do expect gold to cool off a little bit after the past couple weeks of strengthening. The COT Extreme analysis doesn't really show us too much. It's more of an in between the 2 zones, so it's not really something that I would act upon. So that's pretty much it. The COT change signal suggesting some weakness in the near term is what you can really act upon. Now let's move on to large speculator COT Extreme analysis. We have copper on top of our list. And if you just focus here, we have a 295 report extreme in copper. Let me just take off, iCOT scores. It's just going to be easier just to focus on the classic COT charts. So not only do we have a 295 report extreme in large speculators. So what does that mean? Like we've got 52 weeks a year. So it's roughly 6 years since traders were at these levels. But we have an all-time. So if you choose the max chart, because we do allow you access to the full history of COT data, you will see that never in the history of copper have we seen such an extreme. Now, does that mean we're going to see the market tank from here? Not necessarily. These all-time signals can be present in the market for many, many weeks, months before the market reacts, but it does allow you to get prepared. So for instance, over here from April of 2021, we had this huge bearish COT extreme, and the market was able to continue its path forward, after which it did finally react. Maybe not the best signal for us, but the one from June of 2024, that was a marvelous signal, and the market did fall off a cliff after that. Of course, we do need to understand that markets correlate with each other. So you would definitely want to look at other metals, or in the case of copper, it does correlate with indexes pretty significantly. So it's a significant bearish stress level. I would not be surprised if this all-time COT extreme just was there for the next many reports to come, and we would see greater and greater extremes as we move forward. It's hard to pinpoint exact tops or bottoms with only COT data. So I would suggest not to do that. But you can, like, if you were in this market, let's say you took the bullish stress level signals from this 2023 period over here, and you're in it, you may want to consider scaling back on your positions, taking some profits off the table. Cotton is our next market, 245 report extreme in large speculators. Once again, this is a bearish COT extreme situation, suggesting weakness to come in the next couple of weeks, month, we'll see what happens. It takes time, but you can see what happened to the market when we had similar extremes in the past. The market did react. Cotton came down as it did from May to, what was it? May 11th down to June 11th. There was a little bit of a push higher from there, but we're back at those levels again. So, we'll see, but definitely something to keep our eyes on. The last market for this review is going to be feeder cattle. We're having 97 report extreme and large speculators net positions. So roughly 2 years since we've seen traders at these levels. It is a bullish COT Extreme. However, if you look at the chart, we may need to be more patient, and we could see this decline continue before the market bottoms. And I would strongly advise to look at other like live cattle and lean hogs for that matter, just to kind of get an understanding of the whole sector. So that was all for this review. I know it's, just a glimpse, a peek into what happens in these markets. If you are interested in more, you can definitely dig deeper in your COT analysis. We talked about gold. You can just choose the market and find the data you're looking for. Everything is chartable. You can download the data if you are a pro member, which is, I think, something quite unique. And if you have any questions, feel free to comment underneath the video or send us an email to info@cotbase.com. I appreciate your attention. Have a wonderful weekend. I'll see you next time.